This is Renugadevi. I am working as an assistant professor in Dr. SNS Rajalakshmi College of Arts and Science. I belong to Business Administration Department. Today we are going to discuss about the clubbing of income. So this topic only we are going to discuss in this video. So viewers, please listen. Before we are going to see about this topic, the clubbing of income is nothing but it is a provision under the IT Act 1961. It prevents the taxpayers from reducing their tax liability by transferring income or assets to their close relative. So suppose the income they might be when we are going to calculate at the time. Suppose if any person, the any taxpayer, they are trying to reduce their tax liability at that time they are going to transfer their asset to their close relative, like such as the spouse or the father or daughter or the son. Okay, so it ensures that income earned indirectly through such transfer is still taxed in the hands of the original owner, that is called the transferor. Those who are going to transfer their asset to their close relative, that person is called it as a transferor. Adding another person's income to the taxpayer's total income to prevent tax evasion. So that is called the clubbing of income. Actually, this tax will be governed by the section 60 to 64 of the IT Act 1961. So it's simply it means that clubbing of income is nothing but we have to add another person's income to the taxpayer's total income. Clear? Next, what are the key provisions available when we are going to calculate the clubbing of income? Actually, under the section 60 to 64, they are having the some different category of provisions to calculate the clubbing of income. Under section 60, actually the situation made for the transfer of income without transfer of any asset or the consideration. So that time that income will be clubbed with the transferor. Next section 61. It is the category of revocable transfer of asset. Under this category, we are going to club the income with transferor. Third section 64 of 1 subsection 2. Actually, under this section, the spouse income from any firm or any concern, it should be make it as the calculation of income clubbed with the spouse. Next, under section 64 of 2, that is a subsection 2, the minus child income will be clubbing the income with parent of the who is going to having the higher income group. Next, we have the exemptions. What is the exemption under? We are going to calculate the clubbing of income. Actually, under this category, the minus income from manual work or any special talent who is having the child is not clubbed. Second exemption is any child, minor child, they are going to get the exemption up to 1500. It should be exempted when we are going to calculate the clubbing of income per minor child. Okay, each and every child they are having a exemption up to 1500 when you are going to calculate the clubbing of income. Third exemption, when we are talking about this, the transfers for adequate consideration is not clubbed. So this is the main category of three exemption under the clubbing of income. Next, what is the purpose when we are going to consider the clubbing of income? So actually, when we are going to transfer the either the income or the property to the a close relative, that is a family member. At that time we have to prevent the tax evasion. So that is the purpose only we are going to clubbing these provisions. Next, revocable transfer of asset. Actually, it means that a transfer of an asset in which the transfer retains the right to reassume the ownership or control of the asset or its income, either the wholly or partly at any time in the future. So this is make it call it as a revocable transfer of asset. It's a simply said when we are going to transfer the asset at that time that either the transferor that they have to retain the right again the reassume the ownership of the control or the asset of the income.